Good evening, Benny.
Hi, good evening.
Yeah.
Okay, let me share my screen with you. I'd like to hear from you your trading plan. I hope I can since our last one-on-one, I hope that we can there's some improvement. Tell me how you trade now.
Okay. On this one, on this geo that you are showing.
Okay.
Okay.
What time frame?
Okay. This is 1 hour time frame.
Okay, 1 hour time frame. Okay, fine.
And on this one, this is bullish.
Okay.
And my range is around at the bottom around 133,600. The bottom around.
Yeah, here.
Yeah. And on the top around 13. Yeah, that one is correct.
Okay.
So, okay.
Okay.
Okay. With this one, Benny, on this range, I will just wait for a confirmation entry with this range.
Well, are you going to buy or sell?
I will going to sell.
You're going to sell.
Yes.
But you say that it is bullish. You
With
just
this
told
one.
me it is bullish. Huh?
Okay. Well, in this case,
Are you is counter trend in your part of your trading plan?
yeah, actually, I did that one yesterday. I counter trend just around
Okay.
15 pips.
If it's counter trend part of the trading plan, that's fair, right? You can do it because you just tell me that it is bullish, right?
Yeah,
So
this is bullish. This is bullish. I will wait for confirmation rate to sell, and then I will put my TP on this breaker on the left side on around one very near 13520. 13520.
yeah.
Yeah, it's a very short one. And I will expect a bounce.
Okay.
A bounce, and then from there, I will speak again. It will go down. It will go down, and start. And my next TP is around this on this 134 around 1345. So this area, that area.
Yeah.
I'll put my next TP there. Then I will then after that I'll speak again the bounce. A bounce at this level around this level again, this 135204 around this level. Then from there, it will I expect to go down around this 1345, just above on the 1340. That is my TP. Then from there, I will wait again for a final confirmation to go long.
Okay. So let me share with you what I will see this. Yeah. Okay. I mean now if I take a look at the daily or let's say 4 hourly, right? I can see that bearish, and this is a retracement.
Okay.
All right, this is a retracement, and right now we are retracement to about 50%. Okay. And usually the price would like to retrace to 50% before you want to come down lower, and since it is bearish, so the higher time frame to me is bearish, and this is a retracement leg. Okay. And we are somewhere around this breaker. You can see this breaker, right? that coincide with this gap. This is exactly where the price stopped there. Can you see now?
Yes, sir. It's
Okay,
ready.
so this is a retracement rate to this entire downtrend, right? So we can, if this is a retracement, that means we can actually expect the price to make a lower like this, right? Which is normal for us to do that kind of expectations. All right. And it's not surprised the price stopped there and we start retracing. Okay. So now this is based on a higher time frame 4 hourly. Now, if I go to the 1 hour, now I have seen the price have moved from this low all the way up to this area into this breaker, the higher time frame breaker.
Okay.
And I will expect the price to either do a pullback retracement to fill up some liquidity gap, all right, before you want to go low up higher, or the price can totally reverse, or the price might go higher. Can you follow me so far?
Yes.
Okay. So as I was saying, this is the breaker, higher time frame breaker. So I will expect the price to do either a rejection and from here continue to go lower, right? And but before the price go lower, I like to see is any target that this price can retrace lower, because like you say, in a 1 hour time frame, it looks bullish to me, right? So also we can see the price actually make a higher high. So this could end up this way as well, right? We do not know. We do not know. So we have a few potential scenario playing out. Either the price can pull back and then continue go higher, right? Or it can reverse altogether and follow the higher time frame trend, which I would expect the price to start reversing, because after the price had traveled for so long, right, it is time for the price to do rebalancing, right? Rebalancing to where at least you can see that this gap is very obvious. Okay, this is a very obvious gap, and this is about 50% as well. So the chances for the price to reverse all the way down to this 50% is my bias is quite high. Now, you can come to this 50% and then it can continue to go higher, or it can come to 50% and then after that have a little bounce and continue to go lower. Can you follow me so far?
Yes.
Okay. So now, in order for me to jump in to sell, right? Now, remember, if I trade now on the 1 hour time frame, we are in a bullish trend. Like what do you say? We are bullish.
Yep.
Okay. Now, for me to, for us to say that for this bullish trend to turn into the bearish trend, right? We need to see a strong rejection from here. A strong rejection, right? Because we are already at the 4 hourly breaker. And if the price want to reverse, right, we should see the rejection quite strong. But so far, we have not seen any strong rejection from this key level. Do you understand what I mean? If the institution say, okay, they want to take the price lower, we should see an ERC down, pull back, then go lower. But so far, based on the candlestick, is this kind of very lazy movement. You can see that the movement is not so convincing that you want to go
sluggish,
lower.
Yeah.
Yes, it doesn't show that you want to go lower, right? So to take a sell here is quite risky. Because after all, in a 1 hour time frame, we are still bullish. In other words, the price can actually go even higher. See, go to a 4 hour time frame. Now, see, we have this trap order here. We stand out like a sore thumb. Can you see this hammer?
Yes.
Right? So the price might just pull back a little bit and go and test it before you want to go lower. So we don't know. We don't know whether this is the level the price is going to hold or the price is going for this. These are all potential levels, because this, after all, this is a breaker and this is a trap order. All right. So the price might continue to go higher, but the fact that we don't see a strong rejection out from this breaker, it tells me that this is a low right now, for now at least, it is a low probability setup to sell because I don't see the kind of rejection yet, right? Even I go down to the 30 minutes, I don't see that. I go down to 50 minutes, I don't see the kind of huge rejection that you want to go lower.
Copy.
Like this one, if I see this kind of ERC up, but here I see ERC down, then I know that the institution is selling. But here I don't see institution selling. It looks like they have come here to do reaccumulations again before they want to push even higher.
Copy.
So for us to take a sell here, I think it's kind of risky right now. Can you follow me?
Copy, Benny.
Yeah. So these are the things that sometimes we need to take note, right? Example, if I see this kind of bearish down rejection, example, if this is the level, I see this kind of rejection, which is good. Or if let's say this is the level, then we see this kind of rejection. This is very convincing, and the price come back. You see, now this is what I want to show you. This rejection down is very fast, but this movement upwards, it takes time.
Copy.
It takes time, and then eventually it drop again. So you need to pay attention to this: how fast the price move down and how fast the price move back up.
Copy.
Okay. Yeah. So this tells me that potentially we are likely to see another push higher, or maybe we will see this, right? The price will do this down, right? And then now if price go up again during the New York market now, because now it's 8 o'clock, New York market not yet open, right? So if the price, my New York market open up, you might see the price push up higher again, test one more time before it moves down, right? So until now, we don't see that yet. So I want to see a huge move down. Otherwise, we should not sell.
Copy.
Yeah. But overall, you are right? You pick a range, right? This is your range, right? Once you are able to identify the range, that is your range, and you know where is your current locations. Now you can either, if this is a bullish, you want to trade on 1 hour time frame, right? Either you can wait for price to retrace lower, right? Fill up the gap, then wait for confirmation, then you go higher. Or you can look to a sell, do a counter trend trade, right? So these are the two things that we can do. And once you define a range, it makes your job very easy because all you need to do right now is focus on this range. And now, knowing that your location is here, right? And it allows you to trade either counter trend or with a trend. Now, if you want to trade with a trend based on 1 hour time frame, you know that the current location is not the ideal area for you to buy, right? But if you don't mind do counter trend, then you may say, this is a good level for me to do some counter trend trade. But since I'm doing counter trend trade, I should be very, very careful about taking profit, because if this is a counter trend trade, then the price might reverse back up anytime, right? So you must set a very clear target. Now, where is your target? You're doing counter trend trade, right? If it's a counter trend trade, you don't expect the price to come back all the way down and then move back up, because if you are bullish, so then you say, okay, well, if I base on where can I find my target? Immediately you can see this ERC. Say, well, this is the target. This is the gap that market need to fill, right? This is the target market need to fill. So immediately you know that if I put a sell order here, my target is going to be here. All right.
In the middle of the ERC, Benny.
Come again?
The target should be in the middle of the ERC or just above that ERC.
No, this can be your target. You can see the gap here.
Yes.
Right, the gap, right? Yeah.
So the target should be on the middle of that gap.
Yes, middle. Usually we go to the middle, especially is this ERC, the gap lines up with anything else. Does it lines up with any breaker? So you look to your left. Does it line up with any breaker? We have one breaker here. We have another breaker here. Can you see that?
Yep.
So when the price start moving lower, right? You go to your lower time frame, you monitor your trade, you manage your trade. Now, if the price in a lower time frame continue to show a bearish order flow like this, like what I'm drawing, you don't have to take profit. You can continue to hold on to your trade. But if the price arrive your this area where you want to take profit, and then you start to see the price do this.
Get out now.
Can you see now?
Yeah.
So now you know that, well, this is a change of behavior. I see the buyer start to come in, right? So you want to take your profit here already. That's where you are in front of the computer. But if say you're not in a computer, then of course you can just set your target and forget. 50% of this gap and then forget.
Copy.
Yeah. Okay. So again, like I say, after this long up move, we should naturally expect some kind of pullback, right? And we like to see a pullback at least to the 50%, but it might not give it to us, right? Because we have a gap. We have a look at this. But this is not so ideal. I don't want to, because I don't see any. I want to see something that confluence and confluence. Now, if I compare these two, I have a breaker here, but on the right here, I don't see any gap. I have a breaker here. On the right, I have a gap. I have a breaker here. On the right, I have a gap. So in these two, I have double confluence. The breaker plus gap. Breaker plus gap. This one, I have only breaker, no gaps. So which one do you think is stronger?
I think, okay.
This, if the price coming down, this is likely to reject the price. And this is not likely because this has only a breaker without any gap. But here we have a gap plus breaker, like double layer.
Okay, so, that one I am not doing it, but I just look at the breaker, and then I did not see also on the right side to confirm. Now I will do it.
Yeah. You only look at this. You only look at this. How you call it? Pound dollar. So is there any currency you are looking?
I just finished with the Euro GPY. I was watching the news after
Euro GPY.
Yeah, I close with a break even because it came back.
I see. Okay. So now again, how you analyze this pair? What time frame you look at?
I was on 1 minute, Benny, because I see it was around 3 o'clock. It spiked. It is doing some stop hunting by around 3 p.m. This afternoon. It is around 3 p.m. this afternoon. I was on 1 minute, 1 p.m. The fourth candle from the right. Yeah, that one.
This one.
Yeah, I see that one is doing some stop hunting to the left. The rest of the candle. So
this one.
Yeah, I see that one. Yeah. So I was thinking that
what makes you think that it's a stop hunting to the left?
Because there are some it is the
you see all this?
Yeah, I see this one or the left. There's so many
all this?
Yeah, I saw that one.
But you can see, you see now, when you go down to 2 lower time frame, right? This kind of thing is like we have a high, multiple high, the price break up, right? It's like a market break structure, isn't it?
Yes.
And then you expect the price to come back and continue. Why go down? See, we have double top, triple top, price pull back, price goes up. Now, if you are bullish, the price make a higher high, take out all these stop loss. So what is the next? After the price took out all these stop loss, triple top, we would expect the price to do what?
Rebalancing.
Rebalancing, exactly. Rebalancing, right? So before it continue higher. Am I right?
Correct.
So now, what makes you think that it is a stop loss? Because look at this. It's doing exactly what I just said. Multiple high here. You see how the price go up? Rebalancing.
Yep.
Go higher.
Yep.
So what makes you think that this is a stop hunting? So you cannot always thinking that, oh, there's a multiple top here, there are a lot of liquidity, so therefore the price goes up is definitely a stop hunting. Not necessary. And this is one thing that sometimes we tend to confuse between what is a break of market structure. Now this is a break of structure. Example, we have double top, price goes up, price pull back, price continue, right? So we say that this is a break of market structure. How to differentiate when we have double top, price go up, price reverse? This is stop hunt.
Yep. Actually,
so how to differentiate between this? How do you know that it is a stop hunt or it is a true breakout? This is the true breakout. This is the stop hunt.
Stop hunting.
So how can you differentiate?
Well, the rebalancing, it breaks on the stop hunting, it breaks the 50% or more than 50%. While on the order flow, bullish order flow, it will resume on its bias after touching 50% or around 78%.
Okay.
But
how do you know? The answer is this. How do you know whether this is a stop hunting or whether the price is going to continue? It all depends on the higher time frame. Now, you are looking at the 50 minutes time frame. Let's say we are higher time frame. Let's say it's 4 hourly time frame. Okay. Or it can be a 1 day. It doesn't matter. Okay. It can be 1 day. It can be 4 hourly. So now we can, it can be 1 hour. It depends on you what's your higher time frame. Okay. So now, let's say we use daily. Okay. So daily is not so clear. Let's say 8 hours. Okay, 8 hours is clearer. Okay. So now, whether it is a stop hunting or not, right? It depends on the higher time frame. What is the higher time frame telling us? Now you can see that we have a break of high here. All right.
okay.
We have a break of high. Now we have to ask ourselves, why this price want to break structure higher? Is there a reason for this price to break high? Where is the target? Where is the target for this price to break structure? Because for every movement up or down, right, there's always a target, there's always a reason. So what's the reason for this price to break structure upwards? Where is the target? Where is the aim?
To break this to break the 131.5.
Here we can see that there are a few things. We have this ERC, right? 2 ERC gap. We have gap. Can you see now?
Okay.
So at least I think at least the minimum target, I think that the price want to fill this gap. That's the first target, and then it might want to come back to unlock this trap order. So that's why we see the price break to the upside, right? Knowing that this is the target, the next thing we could ask ourselves is, has this target been achieved already? If the target not yet achieved, it means the price will likely to continue to go higher until we hit the target, right? So we have see the price almost fill up this gap.
Okay.
How about this trap order? Not yet, right? So now we go back to the 1 hour time frame. If the target not yet achieved, meaning this break to the upside, it is not a
it's a valid movement, huh?
Yes. The main trend, the bigger time frame trend is telling us that there is a higher target to be achieved first. So any break of structure to the opposite side, is likely to be a stop hunting because it is against the higher time frame trend.
Okay.
You understand now?
Yeah.
Yeah. So there's a difference between break of structure and stop hunting. Okay. The stop hunting, my throat is getting difficult to speak now, so I want to cut short. Yeah.
No problem.
You need to differentiate when you see the price move higher, you take out this stop loss above the high, and there's no reason for the price to move higher, right? And the overall direction is bearish, high time frame is bearish. This is likely to be a stop hunting. This is manipulations, so the price can continue to go lower, because the smart money want to move the price lower, so they need to sell. But in order to sell, they need to take out all this stop loss to fill their sell order. That's why they can move the price. All right. So this is likely to be a stop hunting. But when the higher time frame is bearish, and there is a target need to be achieved, and this target not yet achieved, then we see, let's say, the overall trend is bearish, and we see the price like this. We have double bottom, right? And the price break to the downside. This is not stop hunting. This is likely to price is breaking structure, pull back. This is your range. It's going to continue again, because this is higher time frame trend, and there's a target need to be achieved at the further, not yet achieved target.
Okay.
Okay. So try to practice on these two. Differentiate between what is the break of structure, what is the stop hunting. There's a difference.
Copy reading.